Good afternoon, everybody, and welcome to this weekend's Forex Roundup. I hope you've all had a very good week in the markets. The markets certainly did pay us, just as we were talking about last week, how periods of low volatility, which is what we've been experiencing over the past few weeks, lead to periods of high volatility. The market picks up and does exactly that. It starts to give us some fantastic opportunities, and it was a very profitable week last week. We've obviously been suffering for the past few weeks because there haven't been the opportunities on the table. But this should really go to show you that you just got to wait for the right market conditions, and when the right market conditions present themselves, then good opportunities do follow, and obviously you can make some good profits there. So let's start by looking at the trades for Monday, then we'll continue through the week and look at what we could have taken, the trades that maybe you shouldn't take, and the filtered out trades and all of that kind of good stuff, so that you really get an idea as to how this system works. So starting with Monday, the market had been moving up, had been trending up. The moving averages were just starting to get aligned on Monday morning, and we had a pullback to a previous level of resistance, and previous level of support and resistance. You can see it was support over, it was resistance here, support here, resistance here. So the next time the market pulled back to that level, it was a good bet that it would probably react again, and that's exactly what happened. We got the pullback, we got the entry over here at 8:45 in the morning at 8:44. You're in there again. We're placing our stop behind the swings at the moment, so we're not quite getting the 2-to-1s on these trades, but nevertheless we're doing that just because there hasn't been that much volatility in the market. So we're giving the trades a little bit more room to run, just giving it a bit more breathing space. But in any case, stop below the low there. This is the trigger candle over here. The CCI is in the right place. The stochastics are in the right place. We're in on the open of the next candle, which is this guy over here. And you can see it's very, very nice trade. Comes up towards the highs, up towards the resistance, and pays us very nicely. We then get a second opportunity to get into the markets early in the afternoon, which is this guy over here. Here at 2 o'clock. Now, as you can see, again, we're bouncing around the same level. So that previous level of support becomes resistance. Yes, there isn't a great deal of momentum in the markets, but still we are pushing up, and we're bouncing from what has been a big level over the previous few days. So we're willing to take a punt on that one. We've got enough space between the entry and R1, so that's not a problem. Stop below the low there, and as you can see, this one goes off and pays us very nicely as well. So we were 2 for 2 on Monday, which was very nice. That was the last opportunity that we took on Monday. And then we move into Tuesday's trading, and Tuesday's trading was also quite nice, quite profitable. We started off the day with this trade, not this trade, the next one. We get another trade coming up. Okay, so initially we get momentum. Okay, we don't take this trade over here because this is directly into the pivot point. Yes, it's a pullback, which is nice. Yes, it's to a previous level of resistance, this guy over here, which becomes support, but unfortunately the entry takes you directly into the pivot, so we skip that one. I know a few of you would have taken that, but that's just not for us. These ones, we filter out those trades, but we do get a second opportunity just after 9 o'clock. Which is this guy over here, and you see you get the trigger there, the stochastics have crossed, the CCI is in the right area above -50, so we're in on this one, we're in on the open of the next candle, stop below the low, and just ride this one for what you can get. And as you can see here, it comes up to the highs, which is where we took profit. It did give us a little more, it did give us some more pips later on in the afternoon, but on that first break up there, we didn't actually take that. We just took it off when it came to the highs. So just a little bit more than 1-to-1, but that was fine all the same. Then we get the second opportunity over here at 1:15, which is this guy over here. So 3:14. Again, we're coming back to the pivot. We like taking trades from the pivot because it's a very strong level. If the market's going to stay bullish, it has to stay above that level there. So we're in on the trade here. CCI is in the right place. Stochastics are crossing again. And we're in on the open of this candle over there at 2806. It's also a round number as well, by the way, which is what we really like to see. And as you can see, we just get a little bit more than a 2-to-1. Again, we take it off when it starts to mess around about the highs. Because obviously the market hasn't had that much follow through of late. So, we're not looking to, if there's a clear level, and the day's high is a very clear level. So this kind of level here, You don't want to, if the market starts to mess about that level, then you don't want to push it too much, and hence the reason we got out of those two trades at the highs there, or just a little bit below the highs when it started to turn around. So we didn't get top tick, but we got a little bit more than 2-1, which was nice on those trades. We didn't take this opportunity here because the market then started to roll over. The moving averages started to roll over. Yes, it is the pivot point, but it's failed a couple of times there. Moving averages are rolling over, and hence we missed that trade. You would have been able to make a little bit of profit on it. It wouldn't be 2-1, of course, but you would have made a bit of profit on that trade. But for us, it just wasn't a pretty trade. If you look at that there, these are bouncing off of the moving averages nicely. This one down here hasn't bounced off. It's smashed through the moving averages. It's below the 100 there, so we're just not really looking to take that trade. Then we come to Wednesday's trading, and initially, not this one here, we take a loss on this trade over here. So the markets had been selling off all through the night, sold off over here. The market came back to that level, gave us an opportunity to get in there at 10 past 8 or 11 minutes past 8. So we're in there. The stochastics are in the right place. The CCI is in the right place. Looks a good trade. You're taking it off of yesterday's low, so it's the day low. This guy over there, the market had already sold off from that level earlier on in the morning, so it's a very, very good level to take the trade from. We've got momentum there. You have to take this trade. Unfortunately, it doesn't work out, and actually eventually it takes us out there, and we take a loss on that trade. But that's not a problem, because the Monday and the Tuesday treated us very well in any case, and you can't win them all. But nonetheless, it was a good trade, and we take it every single time. If we got the opportunity, we'd take it again. We didn't get involved in this trade over here. So I know some of you guys took the pop up here when the stochastics cross and the CCI cross there. We didn't get involved in this one. It's just too messy. It isn't really a pullback. It's just kind of, it looks like a bit of consolidation, to be honest with you. So we didn't take that trade there, and that kind of kept us out of the market for the rest of Wednesday. We then come to Thursday's trading, and there were some more opportunities there, namely this guy over here at 8:30. The market obviously is pushing up. It's been pushing up all evening, pushed up the day before. We get a pullback to a previous level of resistance, which is the 2-day high over here. So the high that was keeping the market in the range before, it was actually, if we go back over the chart, we can see it's actually quite a significant level there at the 2830. So it had been in the market's minds for a little bit. It had been treating it as resistance in any case. The market breaks through it, pulls back to it. You have to take those trades. So we got in on that trade there. You got plenty of room between your entry point and R1. The CCI is in the right place. The stochastics in the right place. And again, you get some really nice movement over there. And we took it off at the resistance point when it started to show that it was paying attention to this level. We got out of there. So again, not the 2-1, but you just got to play the markets like that at the moment, because it's not giving you the follow through. We then get another opportunity over here at 10:06, but you don't get involved in this trade. Even though the CCI and the stochastics are in the right place, you're taking the trade directly into R1, directly into the resistance level over here, resistance over here, so it doesn't represent a high probability trade, and hence we didn't get involved in that one. Yes, you would have made money, but there are other times when you'd lose money from those trades. So you just can't, or we ourselves just can't bring ourselves to get into these trades where we're trading into too many obstacles. Remember, it's about the quality of the trade and not the quantity of the trade. Okay, we then get involved in this guy over here at 238. As you can see, the market had rallied off. It had pulled back to a previous level of resistance, which becomes support, which is just an amazing level to take a trade from. It's a fantastic trade there. CCI's in the right place, stochastics in the right place, bouncing off of a previous level of resistance that day. So resistance becomes support. You got to bank on this one making you some money. It's a very, very high probability trade. We take it and we get stopped out. Okay, but that's just trading for you. Sometimes there's nothing you can do about that. That was a wonderful trade, and we would take it every single time. I guarantee you, every time that trade presents itself, we will be taking it. We then get another opportunity to trade, which is this guy over here. This is on Friday morning at 2 minutes past 9. The market rallies off. It pulls back to that same level where we were looking to take the trade from yesterday. This guy over here, same level. So we're looking to take the trade again. The CCI and the stochastics are in the right place on this candle here. So we enter on the open of the next candle, stop below the low, as always, looking to trade up towards a high. That's exactly what we get when the market starts to roll over at the highs. We then get out of that trade. We bail on that trade for sort of maybe 3 or 4 pips off of the high when it was turning around. But, you know, nonetheless, we're still getting over 1-to-1. So that's the important thing with these trades. You know, we're not going into a negative risk reward type situation. And then that was that for the day. The market rallied off on Friday. Then it didn't give us any other opportunity to get involved in the markets. You know, by the time it started to pull back, it was already past 4 o'clock, which was the time that we stopped trading, and hence we couldn't be getting involved in this trade over here. And all of the time the markets were rallying here, it didn't give us the opportunity to get in on the pullback. So that's it. But, you know, overall, very, very good week in the markets. You know, I think we had 1 or 2 losses in the end, and, you know, 5 or 6 winners. So very, very good trading week there. And let's hope that it continues into next week. So until next time, I hope you've enjoyed the video, and I look forward to speaking to you all on Wednesday. Okay, take care now. Have fun.